The Debt Demolisher TV with Sophia Melone.
Hi everyone, it's Sophia Melonē, the Debt Demolisher, here to bring you the tools, tips, and tricks to help you manage your financial baggage the right way. In today's episode, I want to talk to you guys about the different options that are available to make payments or even opt into payment arrangements, payment agreements with the IRS if you specifically owe tax liabilities with them, if you have any outstanding taxes that you need to pay. The deadline to file 2021 tax returns, and that's federal tax returns, or for you to be able to submit an extension to file and pay any taxes that you owe this year, that deadline is April the 18th. And it's April the 18th because April the 15th falls on a Friday, but April the 15th is considered a holiday for the District of Columbia, Emancipation Day. And so since the District of Columbia follows the IRS's deadline, and it's a holiday for them, the IRS has moved the deadline date to the next business day that the District of Columbia, of course, will resume and be operational. So in that case, the reason why the deadline is April the 18th this year is due to Emancipation Day, that is recognized and considered as a holiday in the District of Columbia. There are other instances whereby a few other states may have a different deadline date, and that is Maine or Massachusetts. So if you live in Maine or Massachusetts, then that means you have until April the 19th, 2022 to file your tax returns, and that's because of the Patrons' Day holiday that is held within those states. So there may be even additional instances if you were a taxpayer that were impacted by a natural disaster, and I'm not referring to COVID in this instance, but a national disaster that was declared by FEMA. There are some instances whereby you can have longer times to file your returns. There's a link on the website that'll let you know what those deadlines will be based on the natural disasters that you may be falling within. So the options to be able to pay taxes if you owe them, the best way to always stay up to date and stay current on what you owe is for you to create an account with the IRS. And that way you can be able to not only review your payment activity, review your outstanding balance, you could also make payments. I've done challenges or videos, on the channel that talked about how to set up an account with the IRS and why it's valuable to do so, because not only will you be able to get your payment history, you're able to see what kind of payments you receive, you're able to get your outstanding balance, you're also able to confirm other information that may be helpful to you when it comes to filing your returns for this year. So if you need to know your adjusted gross income, which is typically what you will need from the prior tax year to electronically sign your current tax year's return that you're going to be filing, you need your adjusted gross income. So if you don't happen to have a copy of your tax return, you don't know what it is, you can be able to go online and retrieve that information. There's other things, like I said, that you'll be able to get involved in and be able to confirm economic impact payment amounts, as well as any child tax credit payments amounts that were issued during tax year 2021 that you need to be able to include or account for inside of your tax returns for 2021 once you file them. Some different ways to pay. Let's talk about the different ways to pay. If you do end up owing, you can do an electronic funds withdrawal. This option allows taxpayers to file and electronically pay from their bank account while using a tax preparation software, or maybe even through a tax professional. This option is free and only available when you are electronically filing a tax return. But that does not mean that the processor who you're using to do your return isn't going to charge you a fee. They may charge you a processing fee. But in terms of making the payment, electronic withdrawal for whatever the tax due is, they can do that at no charge based on the IRS. There's no additional fee for that. The other option is direct pay. So direct pay is free, and it allows taxpayers to securely pay their federal taxes directly from their checking account or their savings account without having any fees or needing to complete any pre-registrations in order to make those payments. The bonus to this too is that a taxpayer can schedule payments for up to 365 days in advance. And after you submit your payment through direct pay, you'll receive an immediate confirmation of that payment or even of that scheduled payment. Another option is the electronic federal tax payment system. And so this is a free service that the IRS offers to give taxpayers a safe and convenient way to pay both their individual taxes or even their business taxes if that applies to you. So if you have business taxes that you have to pay, you could also do this by phone or online using the electronic federal tax payment system. You do have to enroll, meaning you have to set up an account in order to be able to have access to this system. So you do need to enroll and register, and you can call this 1-800 number to do that or visit eftps.gov to set up your account. Other options are paying via a credit, debit, or digital wallet. So if you are someone who wants to make payments directly through authorized processors, you can do that through irs.gov/payments. If you are someone who's planning to pay by cash, you can do that as well. But you do have to make sure that you pay cash at one of the authorized cash processing companies that participate at various retail stores. So there's a listing that the IRS provides in order for you guys to be able to check that out. And they urge taxpayers to choose this option to start early because it involves a 4-step process in order for you to actually be able to pay your tax liabilities with cash. Check and money order is another option that a lot of people most likely will end up using. They'll either get a check or money order, and it has to be made payable to the United States Treasury. And it's best performed or best measured that you include a 1040V, which is the payment voucher, attached to the payment that you're making, just to make sure that the check that you're sending in is going to match the amount due that you're planning to pay, more than likely, which should coincide with the tax liability that you'll end up owing. For people who are filing by April 15th, most people are going to file by April 15th for most taxpayers. So you want to make sure that you file on time. If for any reason you need more time to file, you can file an extension. With the extension, you'll automatically get 6 months to file your tax returns for tax year 2021. And that deadline will then be October the 17th, 2022, for you to be able to avoid any penalties or interest that may fall within that realm. One of the things you do want to make sure that you understand is even if you file an extension and you end up owing, you still have to pay penalty and interest on the outstanding debt that you owe, meaning the outstanding tax liability. So it's not necessarily an extension to file. It's not necessarily an extension to pay. It's really an extension to file. So if you end up having a tax liability at the time you file your return, and even though you filed an extension, you'll still be subject to those interest and penalties related to the late filing of that. Okay, so anyone who owes taxes and waits until after the date to file will be charged a late filing penalty of 5% per month, but it will not exceed 25%. So if a tax return is complete, filing it by April the 18th is always less costly, even if you can't pay the full amount. So your key is file on time, file by the deadline, and understand that you'll still get hit with interest as a result of not paying any outstanding taxes by April the 18th, because the deadline to pay in full is still April the 18th. All right, so what can you pay? So you can interest plus the late payment penalty will apply to any payments made after April 18th. Making a payment, even a partial payment, will help limit the penalty and interest charges. And so the fastest way to pay a personal tax bill is with direct pay, the option we talked about further. And one of the things that the IRS is stressing taxpayers to do if they owe is to consider different options for payment. if you may want to take out another loan, if you want to see if you can get another way to pay for the tax liability if it's a lot, because if you think about the interest and the penalties that is assigned based on federal law, it's going to cost you a lot more than maybe even taking out a normal personal loan. So let's just take that into consideration. In terms of online payments, you do have the option to be able to make online payments. You can also do payment plans. So if you have a payment plan, you can't pay the full amount in full. You can opt in and request a payment plan online. There's 2 terms for that. They have the short-term payment plan and then the long-term payment plan. The short-term payment plan is a payment period of 180 days or less, and the total amount due has to be less than $100,000 in combined tax, penalties, and interest. If you do the short-term payment plan, there is no fee for setting one up, though the interest and the late penalty will continue to accrue. So remember that interest and penalty will still accrue on any outstanding taxes that have not been paid. The second option is the long-term payment plan. So payments for this long-term plan are made monthly, and the amount owed must be less than $50,000 in combined taxes, penalties, and interest. If the IRS approves a long-term payment plan, also known as an installment agreement, there is a setup fee that's typically applied in order to get an installment agreement set up. The thing is, low-income taxpayers could potentially qualify for a waiver of that setup fee, or they could potentially be reimbursed. So if you are filing a return on time, the late payment penalty is cut in half if you have an installment agreement. So just take that into consideration. If you filed on time, but then you still have some taxes that you owe, the late payment penalty rate is cut in half while you are on an installment agreement, and as long as that installment agreement is in effect. So that means that the penalty accrues at the rate of 1/4% per month as opposed to 0.5% per month. So these fees and these penalties, these interests, these rates, it does add up. So you do want to take that into consideration and realizing the differences between having a short-term plan or a long-term plan. If you need to make payments greater than 180 days, then you know that you're going to end up on a long-term plan, which will automatically put you into the space of being in an installment agreement, which will then require a setup fee. Some other payment options that may be available to some folks: you may not be able to pay what's owed, so you can request a delayed collection. And what a delayed collection does is it allows the IRS to basically delay increasing penalties and interest that are charged until it's paid in full. So you could request a delay of collection until your financial condition improves, but that interest and the penalty is still going to take effect until you pay that entire balance off. So there's a number that you can call to opt in for that. Another one is penalty relief, which is what a lot of people aren't fully aware of. There is a first-time abatement program that is available to people if this is your first time getting into an instance where you didn't file a return or you didn't pay or whatever the case may be. You could potentially be able to be eligible for first-time abatement, but you would just have to call and find out and put the request in to see if they'll approve you. Last one is offer and compromise. This is a very convoluted and complex process to a lot of people because it requires a lot of paperwork, but the offer and compromise is literally a settlement with the IRS for your tax liabilities. So if you apply, you don't always get approved, but there is a fee, a non-refundable fee to apply for an offer and compromise. You can submit the application inside, and if you qualify, then you'll have to go ahead and meet the terms of those agreements. So you have your options. Get to work.
The Debt Demolisher TV with Sophia Melone. The Debt Demolisher TV with Sophia